The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we wrapped up the week of trade on Friday, of course, we saw more continued fallout from the release of the October World Agricultural Supply and Demand Estimates Report. What is the market reaction and sentiment now? What are some things we need to keep in mind? Well, joining us today to discuss all that and more, we welcome back to Market Talk Chad Hart with Iowa State University. And Chad, always great to have a conversation with you, sir. Hope you're doing well.
Doing well. Hope you're doing the same.
I'm trying my best, Chad, trying my best. And, this core bean market's tried its best to get up above $5 in D's corn and 13 in November beans for quite some time. And, one had to wonder if the October WASDE was going to be enough to give us enough momentum to break through that. But then you look at Friday's action and seeing a bit of profit taking and really just felt like something that just wasn't enough to give us momentum to break through some of those overhead resistance levels, Chad.
Yeah, and I think that is the case. I mean, I looked at it as slightly bullish, so it pushed us up there to test those resistance levels, but there just wasn't enough fodder there to keep us above there. And so you're right. I think we are seeing a little profit taking here because we're still waiting to see. In this case, I think the markets were buoyed by this idea that we continue to see these crops get a little smaller, that supplies have been knocked down a little bit here, but we're still talking about good sized crops. At the same time, too, though, they'd recognize that those usage categories continue to get whittled down as well. And so there's just not enough positive news story there to really propel us above those resistant levels.
No, we just can't seem to find enough of enough news to feed the bull. Let's talk a little bit more about the October WASDE report to give us some more context here. Your thoughts with the numbers that we saw? Anything surprise you? Let's start on the U.S. side first. Was there anything really big that jumped out at you? I think for me, maybe the soybean ending stocks numbers staying the same. That was about the big thing that stood out to me, Chad.
That was an interesting turn of how they adjusted at the demand side as you look there, because it was for soybeans, they ended up, bringing that yield down a little bit. So pulling down on the production side. When you look at the shifts they made on the usage side, they basically reversed what happened in September for the crush. They added 10 million bushels to it this month. They took 10 million bushels out of it last month. So that just put us back to where we were. But it was the export side that I think gave me a little room for pause, that we continue to whittle that down by another 35 million bushels here. And so it does show that we are having a really hard time gaining traction right now in the international markets.
Well, and a really hard time gaining traction right now. And you mentioned the exports, Chad. I mean, the corn side too, a little bit of concern with corn and a lot more corn on hand than beans, I would say. But really just the supply side, we have a little clearer picture, it feels like, after the WASDE. And now we kind of got to turn our attention back to that demand side, don't we?
We do, because I think in this case, what this month's report really said was that, hey, when you're looking from a yield perspective, this year's really close to last year. For soybeans right now in a dead heat. On the corn side, the 173 is just slightly below what we got last month. So I think on the production side, yeah, we know we're working with roughly 15 billion bushels on the corn side. Soybeans weighing in there at about 4.1 billion bushels. So you're right. The idea is we're shifting towards the demand side. And then as you bring up the ending stocks, corn is carrying a lot more there than soybeans are. Soybeans are really tight here in the U.S. market, but they're not as tight when we look at the global market. That's what's also, I think, creating some issues as we look at those international markets. The idea is that we do see substantial supplies outside the U.S. being available for the markets.
Yeah, and that's a big thing. You think about it, South America, for instance, of course, Brazil. CONAB had some revised numbers out as well this past week on the upcoming production, but there's already a lot in the pipeline, and a lot of that going to China. And we've talked about this before, Chad. That's just another reason why some of the U.S. exports are slow, because China, who's one of the biggest players, is buying a lot from Brazil right now.
They are, and that's the deal. When we look at our sales to China, they are off significantly year over year. The question really is here, and that's why I've been watching the data for the last couple of weeks, is do we start to see China reestablishing itself, if you will, within our market? And I think we are starting to see some signs of that. You know, the export sales report this morning basically showed that we are starting to see some increases, and a lot of those sales are coming from China. So hopefully we're starting to build some momentum there. But I think you're right that we're not going to get back to where we were 2 years ago. That South American competition has taken a bite out of what we can expect China to do.
Well, and staying on the China tactic a little bit, to your point about some of those flash export sales, wheat has been showing up here in recent weeks for China. What do you make of that?
Well, I think that's an indication of their crops also suffered some fairly significant damage here through the growing season as well. I think when you start to see them, especially in wheat, make some purchases, that's a good sign that they've got trouble across the feed grain complex there, that they had some rougher production weather this year, and that has put them into the market. Because when you think about the wheat market, China is the largest producer of wheat, and typically they are fairly self-sufficient there. So anytime they make an export purchase, you know, that tells you that they had some problems.
Well, and thinking overall here about the grains as well, and I'm hearing a lot of talk here back in the U.S. Farmers are storing as much as they can right now. They're not necessarily selling as much off the combine as some folks originally thought they would here just even a month ago. So, kind of bringing this back home here to talk about things moving forward. Are you hearing a lot of that right now? Are you hearing a lot more storing on farm if possible, Chad?
Yeah, we are hearing that. And I would say, let me take us back, you know, to the end of September. When you look at the grain stocks report, and as that came out, it indicated that farmers were holding on to 22 crop in a larger amount as well. So we have seen farmers willing to utilize on-farm storage to try to buy some time and allow the market hopefully to, you know, give them some better prices, you know, as we look further out. And I think especially a lot of folks are keying on looking out towards next spring for some better pricing out there.
Well, and thinking about next spring, right now, basis levels, you could probably speak to this, what you're seeing in the Midwest, but I know basis hasn't been too friendly, and one has to wonder if low water levels on the Mississippi River and other challenges like that are having an impact on basis on top of just that general type of harvest, seasonal type of activity when it comes to basis.
Well, that's the deal. I think you're seeing a double whammy when it comes to basis. You're right in that we are returning to, let's call it, more typical levels of basis. But part of what's driving that beyond just the harvest are the logistics problems that we're having. The Mississippi River has, let's face it, struggled over the past year. And we have seen some barge restrictions in place basically since June, but they're really starting to tighten up now. And that normally pushes down on those basis levels. Now, one could sit here and go at the same time too, because of the lack of exports, we're not seeing as much of a crunch on basis as we would say if, for example, we were seeing more of a pull from the export market.
Well, and I have to wonder too that if we do happen to ramp up exports, if we have low water levels in the Mississippi, how much that's going to get moved by rail or truck to the PNW to move out potentially. There's a lot of things to consider there as far as the windows that we have for exports. But you're right, to your point, it does seem like maybe exports being lower right now, not necessarily creating that big of a crunch on our supply
Right.
chain system, Chad.
It's helping us a bit. And you mentioned, the idea is that what we're doing right now is exploring those secondary routes to reach those international markets. So not only thinking about the PNW, but maybe rail down to Houston so that we can still hit the Gulf ports, but just not the main ones out of Louisiana. So sitting there searching for what are the other ways that you can access those international markets.
And the St. Lawrence Seaway is another one I think I'll throw in there too. I know there's been some talk about use of that going through the Great Lakes region as well. We're having a conversation today with Chad Hart from Iowa State University. Chad, let's go over to the livestock trade a little bit, talk about that here too, before we get into some other topics. Cattle, hogs, it's been an interesting ride, especially in the cattle market. And I know we've come down a little bit after being pretty choppy. Some folks wondering, is a top in? The WASDE numbers didn't really give us much in the way of market moving numbers for the cattle market and beef demand. What's your take on this cattle trade here as we're getting into October right now?
My own sense is we're taking, let's call it a long pause, trying to figure out, okay, how much further do we need to go? As you mentioned, what was released with the WASDE report and, what we've seen over the livestock reports over the past month or so is that on the beef side, we're still very tight. We know that production will be down fairly significantly next year. Although as USDA has reevaluated over the past couple of months, they're thinking the gap is not going to be quite as large. You go back 3-4 months ago, we were talking about maybe dropping 2 billion pounds out of the beef market. Now we're talking about maybe 1.7 billion pounds. It's still a massive drop, but just, like I say, not quite as massive. And so I think the market is searching for where is that top end and when do we start to see this industry really start to rebuild itself after the destruction that we've seen due to the multi-year drought.
Yeah, and I wonder too, and we can rope hogs into this in a second, but some of that retail demand, maybe potential destruction there with just the nervousness around the economy and folks tightening their belt. I think that could be another issue that impacts us here through the fourth quarter, Chad.
It is a worry, and I think it's one of these deals that's kind of strange, as you sort of juxtapose what's happening in the beef market versus the pork market. I could argue that what I'm seeing in the beef side is domestic demand has remained fairly robust. It's the international demand where we've really fallen off. On the flip side, pork is struggling domestically, but having actually a pretty good year when it comes to international sales.
Man, that's a good point. And let's segue that into pork a little bit. As far as the futures goes, I know October hogs finishing up Friday off the board. December will take over. And we're seeing that robust international demand. Some worry in the hog market, though, maybe that the Prop 12 concerns have been baked into the December futures contract. So as you talk a little bit more about the hog market, is that something that concerns you moving through into this fourth quarter as well?
Well, anything like a Prop 12 can serve as a market disruption here, but I'm going to say that it's more the order of when I'm looking at these hogs in the $70 range, and then we look out towards April, May, June, sitting there in the mid 90s. What I'm seeing is typical seasonal pricing to me. Now, larger swings, but the idea is I think the challenge here is what we've got is actually good pricing in the hog market, but we've also got incredibly high cost within the hog market. So even while the prices are good, I think the industry is struggling because of high cost and low margins.
Mm-hmm. Yeah, no, definitely things to think about there and watch. In this overall protein sector, this fourth quarter time frame, we do have some big holidays in front of us too that could have an impact with Thanksgiving and Christmas, of course, and New Year's. So it feels like a very interesting time and something just to kind of keep our eyes on to see what not only the futures do, but what cash does as well in both cattle and hogs, Chad.
Yeah, and I think that's the deal here, especially with the hog market over the past year. We've seen a great deal of separation between what's been happening cash versus futures. And I think that's a challenge, is trying to figure out, okay, why have we seen such a large gap there? And then how's it eventually has to balance back out. What's that look like? And we've been seeing some things like you mentioned, Prop 12, and we've got the proposed thing, even with Massachusetts looking at what changes the laws there. So you're seeing some things impact demand side. At the same time, too, like I say, we continue to see inflation prop up a lot of the costs. So we're facing a cost challenge within the industry as well. And so that's putting a pinch on both sides of the hog market. That's leading to, I guess I'll call it malaise, because when you're looking at where production is right now, it's sort of slowly trending higher, not because we're trying to grow. In fact, if anything, I'd say the pork industry's been trying to shrink a little bit, but our productivity is just so fantastic right now that we almost can't help but grow.
Very, very true. Very true. When you mentioned the inflation, we did see new inflationary data out here this past week, a little bit hotter than expected. Other events too that I think are impacting the market that I want to get your thoughts on. Of course, we have the outbreak of war in the Middle East with Israel and Hamas. Couple that with what's been ongoing in the Black Sea region with Russia, Ukraine, of course. We have turmoil on Capitol Hill. There's so many other outside factors. I watch crude oil. It's come down quite a bit. Now moving back higher with some of the worries in the Middle East. Your thoughts on some of the geopolitical issues tied in with crude oil and the dollar and more, and how that's impacting the markets overall, Chad?
Well, that's the deal. I think as you look, you mentioned there's a whole litany of events going on right now, and yet I'm going to argue that the markets remained relatively calm through all that. When we're looking at, crude oil, you mentioned the idea is the concern there is that, okay, if it stays just Israel versus Hamas, okay, the market seems to think that's manageable. We can work around, if you will, that conflict. But the concern is, can it spread more broadly? And if it does, then it does bring up the potential, not only, let's call it supply problems, because you're disrupting the entire Middle East, but, what does that do to also demand as well? Because, you're seeing now two global conflicts that are both pulling on significant resources, both on the agricultural side and the energy side, that I think could lead to much more price volatility as we go forward.
Well, Chad, great thoughts and insight as always. Before we let you go here today, anything final you would share with us or reiterate for folks?
Well, one of the things I know I'm continuing to watch here is as we go through the next month or so, I'm going to be going back to those export markets and watching to see, can we start to see that picking up now, especially, on the crop side, where we have seen our prices for the most part over this year come down to try to find a level to help incentivize some of those sales. I'd say like the data from this morning, for example, showed that we may be seeing a start of an upkick here. How much can we build on that over the next month? Because I'd say this is a crucial period of time for us in order to establish that foothold back in some of these markets.
Well, great thoughts and analysis as always. Chad Hart with Iowa State University. Thanks for joining us on Market Talk today. Have a great one, Chad, and we will talk to you again soon.
Thank you, sir. Always a pleasure.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.